Let me ask you a serious question. If you could improve your dental practice profits by about $50,000 without adding patients, without expanding your office, and without increasing your fee, would you be willing to do that? Because today we're talking about employee expenses, the largest and most impactful expense category in a dental practice. It's also the hardest one to fix, and that's exactly why it deserves your attention. Quick context before we dive in. I'm a dental CPA and I work with dental practices providing bookkeeping and tax services. On this channel, we share real numbers-based insights to help dentists increase profits and reduce taxes. The numbers I'm about to share are real averages from January through October of 2025. First, let's be very clear about what we are talking about. We are talking about employee expenses. And employee expenses include hygiene staff, admin staff, payroll taxes, and benefits. It also includes contractors who come in and do dental assisting work or hygiene. It does not include owner doctor compensation, associate dentist compensation. This category is strictly about the team that supports the practice. Across the practices we work with, employee expenses average about 31% of income. Now, this is critical. The 31% is an average, not a rule. What that means, some practices operate close to 20% and others well over 40%. Same type of dentistry, same state, however, very different averages. And this one category alone often determines whether a practice feels financially free or constantly stressed. Let's make this concrete with an example. If your practice does $1 million in collections per year, 1% is equals $10,000, 5% equals $50,000. If employee expenses drop from say 35% to 30%, $50,000 straight to profit. Not revenue, not production, pure profit. What would you do with an extra $50,000? Pay yourself more, build cash reserves, reduce stress, work less. That's the power of this category. Here is the reality. Employee expenses are much harder to fix than supplies, labs, software, marketing. And you might ask why. Here are the reasons. This is because it involves people, emotions, culture, expectations. You can't just cancel payroll like a subscription. And that's exactly why problems here in this specific category linger the longest. But difficulty does not mean impossibility. You can still fix it. It might take some time. Even though it is hard, employee expenses have the biggest upside of any category. Why? Because it is the largest expense almost any category on the P&L. Small percentage changes equals big dollar amount. Improvements can be permanent if you keep an eye on them. Once staffing is aligned with production, profit improves every single month going forward. And that's leverage. Here is an important warning. Because employee expenses are hard to fix, practice owners must monitor them constantly. When owners do not do that, payroll increases, roles overlap, just one more hire becomes the norm, raises happen without structure, and suddenly employees' expenses go from 28% to 32% to 36% or more, quietly, gradually, and painfully. Here are realistic ways practices improve this category. Track payroll as a percentage of collections on a monthly basis. Align hygiene pay with hygiene production. Cross-train instead of overhiring. Tie raises to performance, not tenure. Plan hires proactively, not reactively. This is about intentional staffing, not cutting good people. Here is the takeaway. Employee expenses are the hardest expense to fix. If you ignore it, it will quietly drain your profits. If you manage it intentionally, it can completely change how your practice feels financially. If you want more real-world, numbers-based insights into dental practice profitability, subscribe to our channel, and I will see you in the next video.